Investors beware. Don't hide things from us. If you do, they could cost you the deal. But know that we can always pivot if we know ahead of time.
The Loan Lounge.
We're back again.
Yeah, we are.
And we're here to scare you.
And we are. Be
No.
afraid. Be very afraid.
Beware. No, I just think like sometimes clients tend to hide stuff from us.
Yeah.
And don't.
Yeah.
That's probably the shortest thing, is just understanding that like we're the broker. So our relationship is with our client. We
Yeah.
also have relationships with lenders. We have this wide view lens of everything that is required to get an approval. Every lender is different, which is why working with the broker is so advantageous, is we know all of these moving parts. We've ran through these hurdles before. And so it's be as truthful on your loan application, on how this deal is coming together and how the structure is going to look, because we can only protect you when we know what we're coming up against.
Yeah. So like on your application, there's something that it's going to ask you, hey, are you party to a lawsuit? Are you getting sued in some capacity, right?
Yep.
That could be you. That could be the company that you work for and you're an executive member of that board.
It's like you
You
ran
know.
into this recently or something.
Yeah. So if you're being sued, definitely let us know because
will
that's
come up.
Because it will come up.
Yeah.
Because what happens is these lenders, the DSCR lenders, the hard money lenders, they don't ask for a lot of stuff.
No.
We're not asking for tax returns. We're not asking for W-2s. We're not asking for pay stubs. So how do they protect themselves? Well, what they do is they do a background check.
Simple.
Yeah.
Easy.
And so if you are in the process of being sued or there's a lawsuit that's happening, then we need to know about that. We need to get ahead of it because there are lenders that are okay with it and there are lenders that are less than okay with it.
Yeah.
So we need to know which way to take the deal to
Where are
make
you
sure that
at in
all
the
works.
process of that?
Yeah.
Are you, towards the end of settlement? Do we just need to push out closing a few weeks to allow that thing to settle itself? Or are we like knee deep? There's no end in sight. And is this going to affect my lending? Because if you don't answer that question honestly, it will come up. And then we could be already through appraisal. You could have
Yeah.
already had money out. And then we're sitting here with, us doing this and trying to figure out solutions for you. Not
Yeah.
ideal. If heaven forbid, we have these like initial conversations, you're flowing, and then you kind of forget about this lawsuit, which to be honest, like they're stressful. I get it.
Yeah.
When you fill out the loan application, if you mark yes, we actually have an automation that says, hey, salesperson, they marked yes on this. We
Yeah.
need to go figure out what's going on with this. So
Yeah.
know that even if you're like, hey, I don't really know that I want to get into the weeds of this over the phone and whatnot, and then, or you kind of forget about it, once you mark yes on that, we'll bring that up before we get into money exchanging for like appraisal and stuff like that. The second thing that comes up on a background check is a criminal background check
Yeah.
as well. Not an issue. We work with people with background felonies and misdemeanors and all the things all the time. So please don't.
I will say, the things that tend to kill a deal are financial crimes.
Correct.
Fraud.
Yep.
Like, oh, I lied to this lender in the past and then I got caught and then I went to jail for it.
Yeah,
Like,
that's
probably
not
not
gonna
going to
happen.
work.
Yeah.
But, like, if you just went and you had a drunk night at O'Charlie's and you upper decked them, then, we can probably
do that for you.
work through that.
We can make that happen.
If it's
To be
very
honest.
specific.
Yeah.
That specific deal.
Drug
Yeah.
charges, we get
Yeah.
a handful of that. That's not an issue.
Yep.
But tell us up front.
Yeah.
Because I will say, though, I did have a deal recently where it was every impression, which you can only get so many updates. And honestly, this was never really updated to us.
Mm-hmm.
But one of our lenders was also, again, totally fine with some of these things. And their capital partners, aka the people that are buying these loans after they originate them, said, let's like tighten up on this a little.
Mm-hmm.
And it just didn't, end up coming to us, and we had to go through the process, and it came up that they were not as comfortable with it. We picked up the deal, we closed it, it was no big deal.
Yeah.
But I will say that lenders are starting to tighten up on that a little bit, but if we don't know, we can't position
can't,
it.
yeah.
Because honestly, I will make one phone call that's like, hey, this dude has XYZ, are you cool with it? And they're going to say yes, or they're going to say no, and we'll kind of adapt from there. But we're going to make all these phone calls for you. We're going to work through all those hurdles. We will likely need some documentation, I guess, to set that expectation so you're not surprised. We may need some court documents. Some of that's public information. We can pull that ourselves. We may need a letter of explanation that, hey, all of this has been resolved and you're doing good. But outside of that, like, it's really not a hindrance. Don't think that that's going to stop us from nearing an approval.
But bring it up early. so
like,
that we can address it.
initial conversations.
Yeah.
It's also in the loan application. So if you answer it truthfully, we'll get a notification. We can always look into those kind of things.
What? Credit?
Credit.
Yeah. So we did. Okay. So I think prior to maybe a couple days ago, we would say, yeah, you got to have a 660 credit score or better. We did just pick up a lender that can go down to like, I think, a 640.
That's for DSCR.
For DSCR.
And then fix and flip is a little bit more flexible. I mean,
Yeah.
technically, if you don't care how bad the terms look and you just have this like
Amazing
downright
deal.
incredible deal and you're like totally fine paying a ton in closing costs, we have lenders that don't charge or don't pull credit at all.
Yeah.
That's shocking, to be honest, but rightfully so. They're going to charge you an
they
arm and a
charge.
leg.
It's insane.
Like
it's insane
probably
what they charge.
10, 15 grand in closing costs, no
Yeah.
matter the size of the deal.
No matter, yeah, for a $20,000 loan. Yeah. It's nuts.
Second to that, we do have lenders that'll go down to 600. Again, that's
It's gonna suck.
like one or two lenders, you're still
Yeah.
going to get kind of gouged. In a perfect world, 640, 660 and above is going to get you best pricing. But like if you're on the bubble,
Yeah.
like if you're just unsure and maybe you had a late this past year or something like that, we try not to pull credit.
Yeah.
In the broker space. Again, with our wide view lens, us working with 40 to 50 different lenders, we're not like pulling your credit 40 to 50 times. That makes
Yeah.
no logical sense. In general, investors get their credit pulled pretty often, so we try to be as mindful of that as possible. So we tend to not pull credit until you're in contract on a deal. You're ready to go. If you are unsure of where your credit is and it could affect the approval or not, we have avenues where we can do soft credit pulls and stuff like that. But like most people know where their credit's sitting. I will say credit monitoring is crap. I mean, there's no way to sugarcoat it.
It does give you an indication, a very broad indication
Very
of
broad.
where you're at. I would say, like if you go into your online banking and you're with a big bank, chances are they've got some kind of credit monitoring service for free, and they'll give you an indication. But also keep in mind that when you're pulling credit, depending on what you're pulling credit for, you're going to get different scores.
Yep.
So if you pull credit as a consumer just for your own knowledge,
It's not the same.
that's going to be the lowest score. Or no, sorry, that's going to be the highest score. So
Yep.
so that typically that's the highest score. Then if you pull for a credit card, that's going to be a slightly higher score.
Yep.
And then if you pull for an auto loan, that's slightly higher than that or lower than. I keep saying the wrong things.
okay.
Oh, I'm confusing everybody. Sorry, internet. Okay. Long story short, just call us and we'll take care of it.
Yeah.
Yeah.
I would say the level of lending, the more you are trying to acquire and the level of risk that comes along with it tends to have a lower score that comes back to us. So
Yes.
the FICOs, there's a bunch of different oh God, that's
Yeah.
a whole nother conversation. There's so many FICOs that can be pulled. Every lender pulls a different one. Some of our lenders do soft credit pulls. Some of them do hard credit pulls. Some only use one credit score. Some of them use all three. The great thing about the DSCR and hard money space is, I guess to bring this up, just to make sure we haven't talked to, I think we have, but let's bring it up again. If you and your business partner have two different credit scores. So one of you has a 620, one of you has 720. Most of our lenders will go off of the higher of the two credit scores. So
Which
be
is pretty
mindful of that.
sweet, yeah.
That's something that I think too often if we hear 620, my next question is, you got a business partner?
Yeah.
You wanna
What's your spouse doing?
What
What's
is-
their
what is-
what's
what are
their
you doing
credit
here?
like?
Just because again, and I think it's great because traditional lending is the lower of the two credit scores.
It
So
is.
this is an exception to the rule naturally.
Mm-hmm.
So just be mindful. If again, you're on the bubble, let's have a further conversation. But
And I do just want to hit that home. So DSC, one of the benefits of DSCR lending is often the lender will use the higher of the two credit scores between two partners. Whereas in conventional lending, you're always going to use the lower of the two credit
yeah,
scores.
and you're screwed.
Yeah.
Yep. So huge avenue. Asset there. Assets.
Assets.
Money.
Money.
Where's it coming from?
That's it. Yeah, we need to know that. So are you getting, do you act, I mean, okay, it's easy if you've just got the cash sitting in the bank
And it's been there.
and it's been there for a couple months, then great, no problem. But if you're getting like money from Auntie Ethel
Oh, I love
or
her.
yeah,
She's
she's
so
great.
nice.
She's so sweet. She gives 7% rates and she's and no points. But she
She has no idea what
that's
she's doing.
because she loves you, and that's why she does that. We need to know that up front because different lenders have different requirements for sourcing assets. So some of them are totally okay with you getting money from Aunt Ethel and or however you're or an investor or whatever.
Yeah.
That's totally fine. But some lenders do not like that at all.
Yeah.
And they'll kill a deal over it. So we want to know that up front and be very aware of what's going on.
Well, and I think there's this impression that this lending space is just like so loosey-goosey and well, you can just do anything. Yeah, like we're still lending money here, guys. Like let's like be self-aware of this. And we're not validating your income. So we have absolutely no way as to how you're actually going to pay for this mortgage. So when it gets to assets, I mean, like some of our lenders will verify the last 30 days worth of bank statements. Some of them will validate the last 60 days worth of bank statements. If there's a large deposit, which is subjective based on the lender. I don't know, anything over 5-10 grand. We may have to source that deposit and figure out, where that money is coming from. Again, overall, are they pretty lackadaisical? Sure. But if we may get this like sexy interest rate from a lender and want to position you with this lender, but not be aware of where your funds to close are coming from, that could hinder the deal overall. So it's like we need to kind of adapt with the moving parts of your transaction, but if we don't know it, we can't help you.
Yeah.
So all of this is surrounded around being honest and letting us know up front. So what is it? Lawsuits, criminal background checks, credit, and assets. Just tell us. Tell us all the things. Tell us all your dirty little secrets. We don't care.
We're the broker. We're not the lender.
We're not the
lender. We can unhear things, but underwriters cannot.
Yep.
So so once it gets to the lender, once it gets through past us and to the lender, then they take whatever they know and they can't unhear it.
Yeah. Let us protect you. We got you.